I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, September the 28th, brought to you in part by Witex. The Witex Corporation is committed to providing livestock producers with excellent animal health. For more information, go to y-tex.com. Placements were blamed for the most part for your board being down, especially your feeder cattle board was down hard, except for the September spot month, which is just lining up with your index levels right now, so you can't pay too much attention to it. Not any play in it at all, but all your out front feeder cattle futures were down hard, and some of them really hard. And you know, your traders decided to pay attention to the cattle on feed report this past month. So that came out on Friday. It was a little bit bearish, not terribly bearish, but they decided to pay attention to it this time. And your inventories were less than a year ago, but they were just under 1 percentage point higher than what your guesses from your average of the analysts were. So missed that a little bit, and your placements were about 2.5 percentage points higher than what your average of your analyst guess was. So they're, you know, and that is bearish. They were calling that. A lot of times these go on by, especially over the past several months, and when they were really hard to gauge. When we were coming through COVID, the year ago figures, you know, everything was just kind of hard to guess, but I guess they're thinking now you go back a year ago and we were getting through it, so it's time to pay attention to that. But also, if you looked into the report, you saw the devil in the details, and it might have been a little bearish than what it looked like even on the face of it, because the placements of heavy cattle, placements of big heavy cattle weighing over 800 pounds were the biggest since the data set. And I've told you guys many times, there's always something that sets a record. I mean, that thing's been going on since like 1996, and every single month you get something that's the biggest, you know, the widest gap, biggest move, something compared, you know, forever, all the way back to the start of the data set. Well, this time it was a placements of big heavy cattle. Well, when you have the threat of high feed costs, and we were thinking that it was going to be worse than what it's actually going to be, well, yeah, people are going to leave cattle out longer. They're going to wait to put cattle in a confinement feed yard until they're heavier, because they want to get as much cheap gain as they can on them. But that was the biggest reason for your feeder cattle board being down so hard. I'm not sure why that happens, but it sucked your live cattle board down a little bit too. And we continue to see, you know, in the last 20 years, we saw your cattle feeding concentration move back to the northern plains. Like 20 years ago, we saw that kind of steadily moving back to the northern plains, because people had forgotten how miserable it can get there in the wintertime. And so, and we got better equipment and everything, and they're set up better for it. And we knew that the industry was wanting more high quality grading cattle, and so we had seen it kind of migrating back to the northern plains after it had started. You know, it had been moving down in the southern plains ever since we first started feeding cattle commercially in big feedlots. We saw the concentration of cattle feeding moving to the southern plains, but then it moved back up north about 20 years ago. Now we're seeing it come back down again. We're seeing the concentration happening mostly in Kansas. But you think, well, why is that now? For the most part, it's because you have so many farmer feeders in the northern plains, including Iowa. I'm definitely including Iowa in this, and they're down big time on their numbers of cattle on feed, and they have just been bleeding equity for years and years and years, and a lot of them have just had enough of it. You know, and I say it all the time, as long as we continue as cattle feeders to buy feeder cattle in a competitive market and sell fat cattle in a non-competitive market, feeding cattle is a piss poor investment. And when you've got your equity of your farm, multi-generation farm, especially those guys up in the Midwest, and they're bleeding it every year, they're tired of it. and they're getting out, and that's the whole reason for our vertical integration, and then the reason why your corporates continue to move things the way they move it, to get rid of the little guy. And that's where all your little guys are at, is in the Midwest and the Northern Plains. You get down into the Southern Plains, for the most part, it's entirely corporate feeding. And they do things different than the little guys do up there. They feed them more efficiently. It's one reason why they don't have as many of the top quality grading cattle. And they can do it cheaper, and they just get by on the basis, the difference between the futures and the cash price. And they're mostly in some kind of a sweetheart deal, so they're getting along better than most of us realize, because we don't know exactly what those sweetheart deals are. But that's just the nature of the beast, and that's the way we're moving. It's going to continue to do that if we don't get some kind of legislation in here for mandated minimum requirements of negotiated trade. And we've got two bills up there. They're trying to kind of come together and make it into one that everybody can live with, and get everybody that's in support of it behind it and get it done. But it's not happening, and we're not getting it. And so unless we get that, our place where we have the most negotiated trade, the best cattle in the world, the best grading cattle and everything is in Iowa, and we've got less and less people feeding cattle. Well, it's because, we had a lot of independents there, and they just can't compete with the corporate world, and that's just what's going on. And I despise anything. You hear the things that I preach. I despise anything that makes less players, less participants in the cattle business. And I don't care if it's mandatory ID, if it's vertical integration in your cattle feeding, with more of it going to the corporates, with the sweetheart deals with the packers, whatever it is. If it causes less players and participants, I'm against that, because I think the way that we have a healthy cattle industry is to have lots of participants. Even at the grassroots level, guys that just have a small place of acres to turn cattle out or to run cows. I think that's what makes a healthy industry, and it just makes me sad to see it getting smaller and smaller and smaller, just like your chickens and your pigs. And if we're not taking things step for step for step, the way that your poultry and your swine industry does it, I don't know what you guys are looking at, because it's exactly the way. If we didn't need as many acres as we do to run mother cows, we would have been done for a long time ago. And don't think they're not spending a lot of money to figure out a way to efficiently confine beef cows. If they could do that and keep the baby calves alive and keep them thriving, they would have already done it, because they're trying to get rid of our independent producers. Especially at the cow-calf level, and you guys that are raising cow-calves, and you continue to just turn a blind eye to what's going on above your head, you better get excited about it. You better be talking to your lawmakers and telling them that we need to get some of these bills pushed through. We need truth in labeling, so we either need the USA Beef Act, or we need to reinstate mandatory country of origin labeling. We need that. One of those, or a combination of the two, and we need the minimum negotiated trade, either the 5014 or the Cattle Market Transparency Act, or a combination of the two. We've got to have them, or we're done. We're absolutely done. You guys will be out of business. Nobody will want to listen to me, because they won't care what the cattle market is. Does anybody out there care what the hog market is? Does anybody know what the hog market is? Nobody cares, because nobody raises them, and the few people that have them on their place and are feeding them, they're under some kind of a contract, and they're just growing them for the corporates. And that's what we'll be doing in the cattle industry too, if we continue to see it move this way. It's a sad situation, but that's kind of where we're at, guys. But so the cattle on feed was a big part of blaming the losses on our feeder cattle futures to start the week on a Monday. It seemed like we're always down on a Monday to start the week. Also, corn was up big, so that's also that's just like on a pulley. When corn goes up, feeders go down, and vice versa, but the feeder cattle don't go up as much. Of course, they've been at handsome levels for several months, all through the summer and spring. They've been at these big prices, and we kind of knew in our heart of hearts by the time we got there that they were going to dwindle away. And a lot of people shorted them, and that's one reason that they did go down is through hedging, and that's what we need to protect ourselves. But corn was up 12 3/4 on your spot December at 539.5. Been telling you guys that all your experts are saying it's going to jostle between $5 and $5.50 a bushel, and it's moving up towards the high end of that. And it's not because of our progress. Our harvest is coming right along. We're 3% on corn above the average of the last 5 years as far as our moving through the crop. And so we're getting right through that. That's not a problem. The condition of the crop is not as bad as everybody expected. It's just about the same as it normally is, even though we've had drought conditions in much of our corn belt. But the eastern corn belt looks pretty good for the most part. But more likely we hear rumors of some of your crop tours, independent analysts going out and talking to people and things like that, and we don't always know what that is, but the insiders in Chicago do, and they push corn higher to start the week. I wouldn't be surprised at all to see it fade back here as we move in through the week. But you guys need to be paying attention to Mr. Magoo administration, the Biden's infrastructure bill. You know, when as I was growing up and went through college and learned what infrastructure was, I thought it was roads and bridges and railroads and fixing up your airports and things like that, infrastructure. But evidently not. It's mostly about the environment and things like that. But if you look into that, and it's been advertised pretty well here of late, is they've got a methane emission tax that they're going to be putting on you, and it's going to be put on the livestock producers too. In estimations, if it goes through like it is, the $3.5 trillion bill, the way it's set right now, which we can't allow that to go through, there's estimated tax of $6,500 per head per year on a dairy cow. How's that going to work? $2,600 tax per year on a beef cow. And feeding cattle too, I guess. Now, it's funny to me how you can charge more per year tax than something's worth by a long ways. $500 per head per year on a hog. That goes to tell you the understanding of these people of what your agriculture is. I mean, it's just unbelievable. That'd be like taxing a pickup $250,000 a year. For its emissions. It's unbelievable how ignorant these people are, how they think that we're going to feed the masses and the world with getting taxed to death and you know, just unable to continue to do business. I don't understand what they think, how things are going to be doing. They also have the ability with this new infrastructure bill to tax the amount of miles that you drive. How's that going to work for our trucking industry? How's that going to work for you people that drive a lot of miles to just get around and get your job done, whether you're working for yourself or somebody else? This whole administration is driving this country down the tubes so fast. We all knew that it was going to happen. Well, you know, not all of us. I guess some people voted for the idiot. But, you know, it's going down the tubes at such a faster rate than we ever believed that it could go. It just spins your head. But let's look at your board to start the week on Monday, and I told you guys it was kind of depressing. October live cattle futures down 52 cents at 122.40. December down 35 at 127.80. All your back months and every traded month of live cattle was down. Your back month's down 20 cents to down 57. That's nothing compared to what your feeder cattle were. Now, September feeder cattle, I've told you, it's just got a few hours before it goes off the board, and it's got to get in line with the CME Cash Feeder Cattle Index, and it's you know, it's within $0.50 or so. So that it's just kind of backing into a parking spot. Down 37 cents at 154.25. October down 257. Whack. now down to 154.77. Your October has been running at a nice premium to September ever since they started trading those contracts, and now it's only about less than 50 cents higher, because we just, we got to it and it's just a mirage. As we get to it, it evaporates before we can get a hold of it. Your back months of feeder cattle down hard too, from 82 cents on your far outs to down $3 as we move up closer. But just a beating on your feeder cattle board on Monday. Weighted average on last week's meager negotiated cash trade in your 5-area feeding region, 54,100 head. That compares to the even more meager 48,200 head of the prior week, and 103,200 head the same week a year ago, and we thought that was bad. I mean, this industry is just it's just slipping away from your producers, from the grassroots people, just right before our eyes. I mean, if you guys aren't paying attention, you've got to be talking to your lawmakers. You've got to get active in your trade associations. You've got to fight back against NCBA, Kansas Livestock Association, Texas cattle feeders that are just pandering right into the hands of a corporate industries, and it's very troubling to watch. But weighted average on last week's negotiated trade in your 5-area, steers and heifers sold live from 120 to 125. Weighted average on live steers was 123.64. That was only down 24 cents on your weighted average. Your whole price there was down more on the trend, but dress sales were down hard. Dress steers and heifers 193 to 198. The weighted average on dress steers 196.30, down $2.34 compared to the previous week's weighted average. So big losses there. Nationwide, we only had 63,100 head of negotiated cash. One positive in there is that your packers were only able to defer about 12.5% of those for the 2 to 4 week delivery. So they're starting to get pretty close to the knife on there. They're not able to set feedlots up as much as what they have been, and of course they won't let you know this. They're not going to tip their hand. And show lists that came out here early this week are down big. Now those cattle didn't just disappear. I think a lot of your cattle feeders are taking some of those cattle off the show list, and they're thinking something's going to kind of come to fruit here because these packers are starting to get a little bit shorter to the knife. But 63,100 negotiated cash last week in the 5-area. A year ago it was 125,000. So we're just losing that much ground here this fast. Your negotiated grid, which I told you is what your packers are going to use to get around the mandated minimum negotiated requirement when and if it comes along, they're just turning more of their grid sales in as negotiated grid. So they turned in 42,400 head this past week. A year ago it was 28,300 head. I guarantee you there's no difference in any of that trade. They're just turning more of it in as negotiated grid, but there's no negotiation in it. I was telling a group on Monday night, it's like me negotiating with my ex-wife. It was me asking and then a no. There was no negotiation. And there's no negotiation in this grid trade. It's take it or leave it. So, how can you call that negotiated trade? If they're trying to turn that in, that's what they're trying to get by on. There was absolutely no trade on Monday, which we're glad of. Maybe guys will stick their heels in the ground and just resist any lower trade when they know that the packers are going to need the cattle. Packers are resisting even steady money because their cutout values are falling. They continued to fall on Monday. Box beef cutout values choice Monday afternoon down 62 cents at 302.70. Selects down 15 cents at 274.38. Talk about what else is going on. I told you guys I was doing a presentation down in Haskell, Texas. That's wheat pasture country down there over in the western part of central Texas there, and moving up towards the north. And I had a nice drive down there from the Amarillo area or Canyon, Texas, down through the big ranch country of the Pitchfork and the 4.6s, and it all looked good. They're very good stewards of the land there. All their pastures look good, even though it's getting on the dry side and they're getting into the fall, but they do a good job in there. I got down to Haskell, Texas there. We had a good talk there and met a lot of new friends there and some Feeder Flash Gang members that really have their heart and soul in this industry and wanting to see what they can do to try to improve it or try to retain what we have now as long as we can. But it was kind of an eye-opening presentation to some of the folks that were there. Coming back late Monday night, it was nice to come through a pretty widespread shower activity in the Texas Panhandle, and in some areas got some pretty decent rains there. Other places just some showers, but it's going to be enough to kickstart this wheat that everybody's just got in the ground there in the Texas Panhandle, and so that's very, very important. But let's talk about your feeder cattle markets in your sales on Monday. Your real-time index on DB auction ended the day on Monday at 152.37. That was up just 8 cents from the end of last week. And we see it falling behind your CME cash feeder cattle index. Normally they're within pennies of each other, and you wonder, why is that CME index up there at 154.87, almost 155, when we know it's really, really hard to get 155 for even a flat 800-pound load of steers, let alone the odds and everything else. And that's the main reason. We're getting into the fall of the year. They're discounting those big, heavy, especially balling calves and the fleshy ones. And your government market reporters, which I used to be one and trained hundreds of them, they're just leaving those cattle out. They're not reporting them, and so it's keeping they're just reporting the bigger bunches and the yearlings and the loads, and it's keeping that price elevated there. If they took all of them like your real-time index does, computer does that, doesn't have any feelings. Doesn't wonder, why those cattle didn't sell very good. Now, we do go through there and screen any unmerchantable kind of cattle and pull them out, but your smaller bunches, your odds, your big calves and things like that, they won't bring anywhere near $155 for an 800-pound steer, and that's just not a good way to estimate that. What are they going to do with those big cattle? Well, they're going to feed them just like they're going to feed the others. So, they ought to get that back down there a little bit where you can gauge it accordingly. But look at your big sales on Monday. Oklahoma National Stockyards in Oklahoma City, 6,200 head. Feeder steers run evenly steady. Feeder heifers, $2 to $5 higher. But your heifers were a lot lower last week. So in comparison there, they needed to kind of come back a little bit. Joplin Regional Stockyards, 5,100 head there for them. Their feeder steers were steady to $2 higher. Feeder heifers steady to $3 lower. Did have a stick-out deal in Joplin. 124 head of 839-pound steers in Joplin bring $154. That's a hell of a sale, and you got your CME index almost that high. A big sale in Faith, South Dakota, Faith Livestock Auction. You won't see that market reported anywhere but here unless they pay for it, but over 5,000 head. Feeder cattle in Faith, they're really good sale there. Had a lot of those peewees, just like they've been having up in that dry northern plains country there, especially South Dakota and parts of North Dakota and eastern Montana. But you look at all the light weights they had in there, that was your best tested weights. Was your steers, 1,075 head of 4-weight steers. God, just imagine that. Average 467 at 192.34 on the average. Your weighted average there. 1,136 head of 5-weight steers in Faith, South Dakota on Monday. The average 535 and weighted average price was 178.77. The heifers, now that is one place we've seen they're keeping a few heifers back, probably hoping because they see that our supplies are dwindling and they want to get in on the ground floor if they can save enough grass to keep them alive. 710 head of the 4-weight heifers average 459 at 166.32 on the average price, and 432 head of your 5-weight heifer calves average 546 with a weighted average price of 161.72. But the best quote that I saw anywhere on Monday, and your Zach Tran top quote for the day, was Tri-State Livestock, and that's in McCook, Nebraska. 65 head, 819 pound steers bring $163. And that's your feeder flash for Tuesday.